My next guest says while we may get a typical election pullback in the weeks ahead, early indicators for the next part of the bull cycle are just picking up. For more, I'm joined on set by Binky Chadha. He's chief global strategist at Deutsche Bank. Binky, it's great to see you again. Welcome.
Thank you.
So you are expecting a little. Why do we always get this rockiness around the election? The markets just don't like uncertainty?
Oh, so around the election, we typically get a pullback. And just to be clear, that only happens in close elections. For the last 20 years, all elections have been close, so it applies to all of them. It's simply the market buying protection for volatility around the actual election. And so typically you see the market starting first week of October, so a month ahead, basically pull back 4 to 5%. And typically bottoms with the election, maybe a day before. And as long as you get a clean result and the uncertainty is resolved, you get a pretty strong rally.
That's what I was going to say. There are already people wondering if we don't know election night what happens and this drags out for days or weeks. I guess then it would be natural to expect the market to be unhappy about that.
Yeah, I think, there will be volatility. There's not a whole lot of historical examples of when we had a hung election, but we do have one.
What happened with the market during that time? Because that would have also been
right.
With near peak of the dot-com boom before the NASDAQ
So I was
crashed.
just going to say, you've always got to keep in mind what the trend in the market has been. And the trend is coming really from the business cycle. So that's Bush-Gore. We were in the midst of a downtrend in the market. We dipped down a little bit more. So I'm just saying the pattern still held. We dipped down a little bit more relative to that trend.
Right.
When we didn't get the resolution, we dipped a lot more below that trend.
I misspoke. It was March of 2000 that the NASDAQ peaked. So we were already down significantly by the fall. And therefore, there was a pretty big headwind no matter what was
so I was referring to the Bush-Gore election, actually.
I see.
And so once it looked like we were going to get a resolution. Yes, it did require the Supreme Court, but the market's always thinking about where things stand. And so just before, basically, we actually got the result, you did see the market rally. And of course, after that, the downtrend continued.
Having a sample size of one is never anyone's favorite to extrapolate from.
Yes, but it does conform to the same principle. So it just says you have to be mindful of the trend. The trend has obviously been very positive so far, even though we have just had basically 2 back-to-back pullbacks.
What is going on with the business cycle? We just heard from the Fed, Laura Mester, who's with the Fed until June, talking about how it's a little less clear how to balance inflation and the labor market right now.
Yeah, what I would say is that, we've had this issue because of the peculiarities, basically, of this pandemic recovery cycle. So not to sound like somebody that can't hear, but let me just take an example from where I live, which is in the equity markets. If you think about S&P 500 sales, given the peculiar nature of the recovery, we're talking about 10% GDP growth, 10% inflation. We had S&P 500 sales growing at 26% year on year.
At the peak?
At the peak.
Wow.
And then they continued to slow because it's obviously an unsustainable pace for the next 2 years.
Yeah.
Now, if you have something very elevated and that's slowing for 2 years, it is very natural to extrapolate or be at least concerned that we're going to go right through. I still get plenty of inquiries. You want to talk about the negative sales growth for the S&P 500.
Well, that's why, you've been sort of correctly bullish during many of these recent years about the overall market digesting that whole adjustment period.
So S&P 500 sales growth landed 5 to 6 quarters ago at 5.5–6%. It's back in the pre-pandemic range. It's slightly actually above average, so there's absolutely nothing wrong with it. And I went to this example, so if you do the same and think about the labor market the same way, 2 different measures. So what everybody tends to focus on is, the actual employment numbers. So if you take private payrolls, and we are after the trend here. So if you look at a very slow moving measure, which is the year-on-year growth rate, And it looks actually kind of similar, not in timing, but very similar to S&P 500 sales growth.
When you tell me that,
we were up at 15%, we came down. And what I would say is for the last 7 months, the labor market in terms of employment looks already like it landed at 1.4%, give or take second decimal.